us as ghosts and machines. Would the real be just silent if there's a hole in the key? At the bar in the basement for another glass of tea. Our love has a violent constant space in between. And as much as I'd like to believe there's a truth about our illusion, well, I've come to conclude there's just nothing beyond it the mind can't perceive, except for the picture of space in between.
Everywhere, face, back, underarms, hands, front, tops of legs, feet, everywhere. I've tried to control it using drugs, that didn't work. I've tried alternative therapy. I've tried to control it using drugs, that didn't work. Since adolescence, and it has gradually got worse as I've got older. And it does stop me doing a lot of things socially as well.
All right, hey everyone. People are still gathering a little bit. I'm going to let them gather for another minute or so. Thank you all for joining us today. It's funny, we about a week ago, we thought we would, hey, maybe we can put together a little webinar, get some information to people. Maybe a few people will be interested. I'm not really sure. And we put out the invitation and all of a sudden we've got like 400 people on the call today. So apparently people are interested, and we will try to help everyone get some real information into people's hands and see if we can't make some progress. There are a lot of people still gathering, so I'm going to give it's just a little more time. We'll do a little bit of housekeeping stuff. There's the chat window and there's the QA window. So there's a little Q&A button on the bottom of your Zoom screen. Whoops. That you can use. Because of the format, I probably won't have a lot of time for questions today, but if you want to record them and get them out there, we're going to try to go through them and gather them. We have a lot of, we can track and try to hit things in the future. We can follow up written, et cetera. So those are going to be our mechanisms for today. Because it's a webinar, it's not really a great two-way street. It's more me talking at you, but that's what we're going to do today. Let's see, some other housekeeping. I try to keep it to about 30 or maybe 40 minutes, depending on how much I ramble today. And we have in the audience, because it grew to such a big group, a surprisingly large group of people, we have folks from individual agents and loan officers and title reps through some of the biggest investment and data companies in real estate that are attending the call. I'm going to try to inform all of us, everyone in the audience, as much as we can, hit a little bit of topics for everybody. So let me, in fact, start with agenda-wise. Here's what we're going to do. We're going to start with what the data is showing right now and what we are watching, and the data points that we're taking a look at. We're going to then shift gears into how to talk to clients about the market right now, the shift in mindset, and how we should be phrasing our information, and then wrap up with the systems for staying connected with buyers and sellers in the market right now. So that's the plan for the day. Let's dive in. All the data is Altos Research data that we're looking at. Altos, for those of you who don't know, Altos tracks every single home for sale in the market every week in the whole country. Essentially 100% of the zip codes in the country. We bubble up the analytics into local, regional, national views. The first set of data that I'm going to show is national data. I'm focusing on single family homes in this data. All of the data is sourced as of Friday, so it's super recent. And then when we start talking about working with individual clients, I'm going to shift into local framework. Let's start at, here's what we're looking at right now. So the primary operating assumption of the year has been that inventory has been record low. That is a function of a bunch of things, 9 years of strong real estate market. And recently it's really become apparent that because we've had prolonged low interest rates, our holding costs on our homes are very low. So what's happening is that people are, as they move, they either selling up, moving up, or moving down, they are keeping the former residence for things like income. It's cheap, but it's a good deal to hold onto the home. Home prices have been going up, holding costs are low, income on the properties has been going up. As a result, we've got super low inventory. Now, this is a chart of inventory over the past 4 cycles. You can see the trough each year happens January 1 through March 1, and then we typically get a March, April, May climbing the new spring inventory coming on the market. Here's where we are right now. Here's our March turn. And you can see in the last week, we've had a few more homes come on the market. Those are typically those ones that were in the works that happened, that still got listed last week. We're at only about 750,000 homes for sale. It's significantly lower than a normal market. It's even lower than it was last year at this time. Last year at this time, we had, which was still low, but we had more properties because if you recall, third and fourth quarter of 2018, mortgage rates were climbing, the market was slowing, more things were coming on the market. So you'll see that theme in the data, the difference between first quarter of 2019 and first quarter of 2020. You'll see it in a few of the national things, and we'll see how that's going to play out. What we're looking at, though, is for the next few months, the whole market's been put in a deep freeze. It's neither transactions nor listings. And so as we suspend time, we'll be in this normal stretch of March, April, May, June. The typical peak of the market is June 30, then July, August, inventory starts falling back down through the end of the year, second half of the year. Seasonality is very precise. What's going to happen this year is that we're in a deep freeze, and we're going to get to this June period, and we're going to be 25 to 50% fewer homes on the market than would be normal at the time. And that's an interesting side effect of how we are different from the last bubble, the 2007, 8, 9 crash. At that time, inventory could be high, and when demand fell off, now we have real cratering problems in home values. Supply and demand gets out of whack. In this case, supply is super restricted and is staying restricted. So that's going to play out differently in the cycle this time. At least in the short term, is going to, I think, it help buoy values, because when we look at supply is super restricted. For whatever demand is out there, we'll have our the supply will get sopped up really quickly. When we talk about home prices in the Altos framework, Altos tracks every house for sale on the market. We track the median price of every home on the market, and you can see the seasonal and cyclical trends that we've been in. We have our first quarter climb, and which usually peaks mid-year, and so the blue line here is our normal median price. First thing to notice is we did have a 1% downtick in median price last week. That's super unusual. Usually this time of year, it's our relentless climb as the market hits its real stride, its second quarter peak stride, before things start cooling down. The third quarter, got to get things sold for school, then it's holidays, and the cycle resets again. So first thing to notice is we did have a downtick about 1% last week, which is surprising. The green line on this chart is the median price of the new listings. This is the cohort each week of properties that get listed on the market and their prices. The reason we check this one, the reason I like this one, it is the earliest leading indicator of the whole collection of how do we measure home prices. What happens is when you list your house for sale, you pick your price, and the realtor knows, well, we had a lot of traction. We had a lot of people at that last open home. The one down the street had multiple offers. That information turns into a really fabulous, what they call wisdom of the crowd. So the crowds in this case are the realtors, and then in aggregate, the realtors know exactly where to price the homes. And so we can see the trends in this green line before, about a month before it turns into the market as a whole, the blue line, which is then a month before they start closing, and another month beyond when you start seeing the data reported. So typical real estate data is going to be, it's at the end of March and it's reporting February data. Here's what happened in February right now. This green line shows what's happening. This is the properties that got listed right now. You're going to see them in the market over the next month. They're going to get offers. So it's 90 to 120 days before many of the headlines. So that's why we want to look at the price of new listings as our first leading indicator. In this case, so it's much more volatile than the market as a whole. So you'll see some bounces. We did bounce down 3% last week. It's kind of unusual. It's one data point. So I can't report it as the market's crashing. Don't take it that way. But it is a down data point. And you can imagine, because of course, there is a certain amount of risk priced into the homes that are coming on the market. So the ones that are coming on, it's been a strong spring, so we know that. But all of a sudden, it's what is going to happen. And so let's price it down a little bit to maybe we can scare some more buyers out of the bushes and into action. That's where you can see this happening. We'll be watching both our median home price number each week, as well as the price of the newly listed cohort. You can tell a couple other things from this chart. Each year, each first quarter, as the market heats up, there's typically a compression in the distance between the green and the blue line. So in the beginning of January is when we have our lowest trough, and then we start listing and the prices get more. As the market is pretty warm, they compress, they get closer together. As the market cools, as it did in the third and fourth quarter of 2018, that spread starts to happen wider again. So now we have this wider spread here. That means new prices are ticking down, and it hasn't yet been absorbed into the market. We were, as you can see, first quarter this year was compressing. That's a bullish sign for the market. Like we are on our way to a really strong demand, good price appreciation year. And so we'll be watching the spread of these two numbers as we progress in the coming weeks. So that compression spread. So that price of new listings is that earliest indicator. And so we did have a couple of those sort of bearish signals this week for the first time. Something to keep an eye on. Next, let's look at demand. As we measure real estate demand, it's a tricky metric. We're always tempted, the market is tempted to use a transaction rate as a proxy for demand, like how many houses sold? Well, that's how many people want to buy houses. But you can't measure demand by sales rate in a supply constrained market. We've had a supply constrained market for years. So the number of transactions is limited by the number of homes for sale. So sales rate's not useful. However, we can measure demand with the percentage of homes on the market that have taken price reductions. We like this as a proxy for demand, because what happens is, and when you look at the data broadly, about a third of the homes that get listed, generally rule of thumb, third of the homes are overpriced. Sometimes that's strategic, intentional. Sometimes it's a crazy client that wants too much for their house. There's a bunch of reasons, but about a third, they take a price cut before they sell. What happens is in a hot market, and in the first and second quarters of the year, that there's new inventory, demand is good, so about a third think they're overpriced, but only about 25% actually need to take a cut. That's because there's multiple offers, or there's lots of demand coming through. So we can see that relax. Now on the other side, when demand weakens, all of a sudden you go 33, 35%, 40, 45% take price cuts, because about a third thought that they were overpriced, but 45% or 50% have to take price cuts to move the house. So again, you can typically see this space of March, April, May is when we start seeing a few price cuts, because homes got listed. Now they're on the market for 90 days. The second quarter, we see that maybe we've overpriced. We start cutting the price. By mid-year, by June, we know that our demand is starting to peak, so that we're going to need to cut our prices for the fall, because then school's starting. We want to move this thing before school starts. And now all of a sudden it's November. We got to get it off the market. We'll just cut prices more, and then the cycle resets for the year. So here's what we're going to be looking at right now. No price cuts, no change in price cuts week over week. We started strong, right? We're at 26% last year, when it was a little weaker to start the year. After the weak fourth quarter of 2018, it was at 28%. The more maybe 24 or 25%. So we started pretty strong. Because we're in the deep freeze, we haven't taken price cuts yet. It's still early. The signal we're going to be looking for is in a few weeks, do those price cuts start happening? My suspicion is that the market stays in its little stasis, its frozen state for several weeks. Like nobody has to take action. Nobody is doing this. There's neither supply nor demand changes. So we're going to watch this go horizontal. Then as things open up, whenever that is it June, July, where we start being able to sell homes, we start being able to tour homes, we'll see whether the demand is there or whether people are still afraid. One of the other interesting things is we can measure demand, and we're already seeing it in the virtual tours. So agents are obviously seeing a spike in virtual tours. We're not able to see demand in open houses, but we are seeing people are still very much interested in thinking about buying. And so I think that's going to keep our price reductions low for the next several weeks at least. But this is one I'm going to keep an eye on to understand demand, especially when we can start coming back to it. Let's switch gears now to talking to consumers. How do we communicate all this? This is the pyramid. Some of you may be familiar with Maslow's hierarchy of needs. Abraham Maslow is a psychiatrist. He built this framework of how we as humans need to satisfy our life needs. And once we get the basics in place, the food and water, we think about shelter and home and security of our family. In growth times, in strong markets like we've had for 9 years, real estate marketing is aspirational. It's about confidence and respect. It's about creative expression. And so we've been in this mode of reaching people at the top of Maslow's pyramid. All of a sudden, we're shifted into safety mode. Is my family safe? Am I going to lose a bunch of money? Do I have a job? We've shifted out of aspirational mode into safety communication. And so I urge you to think about that frame of mind as you're working with your clients, your consumers, in the next few months. The way we phrased it the other day is, people are afraid, and real data, information is the antidote to that fear. So we're going to communicate with the actual numbers. One of the temptations as in this industry is that we always want to be cheerleaders. The market's great, and even when people are looking out their window and going, it ain't great. So when the consumers ask, how's the market? The key for us is to be in thinking about safety, security, and confidence in the actual facts. So when they say, how's the market? The powerful answer is to answer with the data. Inventory is still super low. Therefore, that's actually helping us keep the market, prices aren't falling through the floor like they did 12 years ago. So using the specific bits of data helps us communicate in where the consumer mindset is. Let me switch real quick to actually looking at the reports. And when we are talking to consumers, this is an Altos report. This one's branded for Altos, but of course for each of our clients, it's branded for you. And that's part of the important part of the communication here. The reports branded for you are, because we want, as we're working in safety mode with clients, we want the information to be coming from you. You're the source of data. You're the source of the calming source. Let me make sure I stop my share and switch over. There we go. Switched over to the Altos show. Thank you for raising your hands. I think that was what people were pointing out. Okay. So this is an Altos report. It's branded for Altos. Of course, all the as we pointed out, so this is normally branded for you. There are other elements on an Altos report with the data that is going to be useful, really useful in this time. One technique is we call it the Lee Brown technique. Lee's an agent in Charlotte, and her question is simple with the client: are you a big geek or a little geek? Because even if you're just a little geek, I'm going to put this report in your inbox every week, and I want you to look at one number. In this case, that one number is our market action index. The market action index is a really easy at-a-glance measure for how's the market. It takes supply and a bunch of different metrics of demand, and it moves them together so we have this speedometer. As you can see, obviously, it's been a hot market for the first quarter. Like the supply is super low, demand's high, interest rates are low. All of those pieces have been in place to make a robust market for you. So as we are in our deep freeze, I want you to keep an eye on the market action index every week. As that falls, there's going to be more opportunities for buyers and more competition for sellers. My guess is it's going to fall a bit because we're going to have fewer transactions. We're going to see that that demand is a bit lighter. And then we're going to see where we come out as we start emerging. How quickly do we recover? So that's the one we want to keep our eye on every week. Now, if you're a big geek, now we can dive into all the data, right? We can look at all of the data points that we were talking about before, whether it's, just checking median price trends, the percentage of properties with price decreases. So in Austin, we are at 21%, super hot market. We can look at, let me go down here and actually we can choose the price decrease. And you can see the seasonal changes in price decreases. So Austin has sometimes in the late part of the year, higher, closer to 50% on their market. But this spring was down at 21%. So things were looking really strong. And so one of the messages here is that we were coming off a very robust base. We know that that we can dive into all these things. And so in your Altos account, you can do it in the reports, and we can actually also go pull up and dive into any of those data points that we were talking about for the national scope. One of the other elements that we like to do in all the Altos data that becomes very important when we're talking about this safety and fear scenario is we look at every market in the country in price range segments, quartiles. The high end of the market may be behaving very differently from the low end. A lot of times when we're battling misinformation with clients, we know that they might say things like, well, the house down the street took 4 months to sell. So I'm going to lowball my offer on this one. And what we can point out is, for example, in each of these price range quartiles, the high end of the market in Austin is $1.8 million. The low end is $330,000. And look at the days on market difference, 48 versus 112. Like, you can see exactly where the demand is in this market. You can see where the action is more coming on and more getting absorbed. You can see what that means in terms of properties and prices and And so using the market segments in your conversation with customers, clients, prospects, that's a super powerful place to be. In your price range, it's still super hot. So we break down all of our data in that way. There are other elements in the Altos reports that I'll mention to you. I'll just point out really quickly. Everything is searchable, so your reports have you hand a Austin report to your client, they can search, and they could search and do any zip code, or they could go somewhere else in Texas, or they could go anywhere else in the country. And that allows you to present your data to them for their consumption wherever they need it. That also gives an opportunity for lead conversion to actually help more people come into your funnel, into your contact database. There's a couple of ways to do it. Under my little picture up here on the Zoom window, there's a few buttons. If you move that little picture of me talking, scroll it down, there's a subscribe button, a call button. So, your client gets your Altos report and they click to call. And there's a share button. That share button it's really fascinating. One of the first things that happens when people start looking at their local data is they want to send it to their friend or their brother or their cousin. And so we have this little share button that makes it super easy for them to share via email. When they do that, we know, hey, you shared it and you shared it to your brother, and now we know both of those contacts, and we can actually initiate the communication in that part of for those people. Like it helps us reach more folks. So that's a quick tour of the local data. There's a lot of action we can go. We could actually dive down into the Altos system, the back end of the Altos system, and do things like search for other reports. We can look at our contact list and understand who's reading the reports. We can use the email system to understand who, like, get it out to more folks. Real quick, we can dive into the advanced part of any city in our case, in our subscription. We can look at any of the stats. Here's our median price of new listings that we can look at. And so we can dive in and build that data for any of the areas we subscribe to. I'm not going to spend too much time on that right now. In fact, let me switch back over to my screen share here. Part there. And okay. And let's talk about shifting gears into the systems for reaching people. Now, we're in a space where consumers are afraid and interested, and they have time to pay attention. This is evidenced by the fact that, we have hundreds of people on the call right now, and I thought we were just going to send out an invitation to a few friends. So there's some systems to think about being in front of people. With real estate data in a traditional sense, as I mentioned, it's lagging, and it typically comes out like monthly, like here's what happened in February, or we'll start seeing those things. But things are moving so fast right now that the weekly update can be super powerful. We do it in a few ways. In Altos, we build the automatic email for you so that you can say, hey, here's your Los Gatos, California report for this week. I want you to look at one number, or dive down into your price range. But that kind of communication. Things are moving very quickly. Keep an eye on this every week. We do, as I mentioned, because we're sending to your customer base, your clients, your sphere, we can track who's reading your reports. And that's powerful because the people that are reading your reports are the ones who are interested, who are curious, who may be needing to take action. Oh my God, what am I going to do? So those are the ones that need the phone call. Those are the ones that need your attention right now. Those are the ones who need your help and are expressing you. So a very quick scan through your Altos account I know exactly who to communicate with. And it allows us to help them as quickly as they need. So the automated email and tracking of reading and actually tracking of the new people who come in, the top of the funnel, new contacts who are trying to figure out for the first time what's happening and starting to engage with you. All of that's part of the view that you want to have while you're using the data every week to be in front of people. Finally, let's talk about building for the future. We're in a transaction deep freeze. We're not in a relationship deep freeze. Remember that we are communicating about safety and that information, data, is the antidote for the fear. So we have 3 easy ways to reach new people, to build that pipeline, put people on the top of your transaction funnel. These are ones that we're nurturing over time. They're not taking action now. So our job is to get them with the most information in the most confident place in understanding how the market is going to act for them. Of the 3 ways, the first, as I mentioned, that the first reaction is people love to share their reports with other people. That share is an excellent way to capture who's using the report and who's receiving it. It allows you to put more people at the top of your funnel in your sphere so you understand that you're reaching more people. Social media, everyone's on social media right now. Everyone's sitting home online all day. And so your market data is a powerful, positive, information-based post. Saying things with the data, inventory is still super tight. Here is your data for Austin. By the way, there's a search box, search any zip code. It allows you to get useful content in front of people very easily, and then also, help build your pipeline over time. The last step is then promotional. So Altos will do one-click Facebook ads, for example, so that it allows you to reach even more people. The system automatically writes the copy for the ad. Buyer opportunities are starting to show up in this market. So the system looks at a bunch of million different variables and actually will write the copy for you in your Facebook ad, run the ads for you, and then drop the new contacts into your database, get the reports to them, and allows you to do then personal follow-up. Makes it super easy. So it's like people are getting your reports, they're sharing it with other people, you're sharing as much information as you can to as many people as you can, and then promoting it because that's frankly how the world works. So just a quick summary. Like I'm trying to illustrate why that information is the antidote to fear. There's real things happening. It's not all bad. It's not, but when things are changing negative, we want to be able to tell people exactly what's happening. So your data is the antidote to the fear. That inventory number, that price of new listings, price reductions, and then the local market action index, those are really powerful ways to communicate what's happening right now. Keep your eye on it so you understand and mention it out to those. And then sharing the data, of course, is the act of helping people, right? So letting them know what's going on is your opportunity to reach and help folks. So thank you all for coming today. I appreciate you all. I'm so fortunate that I get to be surrounded by such remarkable professionals. It's a remarkable time for all of us. So I'm feeling personally grateful that we get to be in a place where we're helping a lot of people, where you're helping a lot of people. We're adding positive value to this market. For those of you who feel compelled, you want to dive in, you have specific questions, you want to understand how things work in your business or your market, schedule a strategy session with us. We, altosresearch.com, the contact form, book it with our strategy team. We'll dive in, we'll explore how the specifics of your market work and your business, how we integrate with your existing systems. We'll take all of those things. You can also email us at support@Altos. You can email me directly, Mike@Altos. All of those things are ways to, but I encourage you to book that session so that if you're thinking about like, wow, how do I get and do this for my people? It's time to take action. Let's book that right away. So thank you all. I'm going to wrap it up there, and we're going to go look through any of the QA, any of the chat. We'll hopefully get a we can look at any other questions. We can take things over time, and maybe we'll do another one of these in a week or two with some more data. Let me know if that is something you're interested in. Thank you so much, and we will talk to you very soon. Be safe, be well. Love you.